It's time for Where You Live with Gene and Tony, the show that's all about owning, buying, selling, renting, and association management. If it involves a home, we'll talk about it. Here's your chance to get your homeowner questions answered. Here are Gene and Tony.
Needed the shelter of someone's arms, and there you were. Needed someone to understand my ups and downs, and there you were. With sweet love and
welcome back to Hour 2 of Where You Live with Gene and Tony. We're so glad that you could be a part of the show today. If you're just joining us, we just started at the end of last hour talking about this story out of Sarasota, Florida. The Dolphin Tower Condominium Association is suing the insurance company because the insurance company is not going to pay out on this claim because of cracked and buckled concrete that needs to be taken care of. And the attorneys for the homeowner association saying it should be included in something that is covered. We wanted to turn to the expert, folks, the person I call Mr. Insurance himself, Irv Cohen. Irv, thanks for staying on, and I'm sorry we had to cut out that last segment here kind of quick on you, but we've got a little more time to have you kind of explain what's going on and what's meant when an insurance company talks about all risk.
Thanks, Gene. One of the things I wanted to be able to clarify is that term all risk is no longer used in any insurance policy. As a result of several lawsuits, the insurance industry figured out that the term all risk gives the consumer the clear understanding that everything is covered.
Sure.
Okay.
Sure.
So that was a common phrase used.
It certainly was, and in doing this for 31 years, I've used that phrase several times.
Sure.
So I can understand where the lawsuit came from. What's interesting is that there's certain things in all insurance policies that have always been excluded. Things like flood, unless you buy flood coverage. Things like earthquake, unless you buy earthquake coverage. War has always been excluded. Just wear and tear. So a roof is 35 years old, and it now starts to leak, and it really wasn't as a result of anything other than wear and tear. All those kinds of things have always been excluded. Believe it or not, cement cracking, settling, that has always been excluded from all insurance policies. And the unique thing here is that the attorneys, I think, did a great job of saying we were communicated with the idea that everything was covered.
Sure.
And that term all risk was, in fact, in the policy language.
Wow.
Well, let me play the devil's advocate here if I can.
Sure.
Even though the word all risk was used in the language of the contract between the insurance company and the homeowners association, I've read a few of those over my time here, Irv, and they then specifically go into quite a bit of detail of what it means of what's covered and what's not covered, even though it was, quote, all risk.
Right.
And so wouldn't that be true here? And I mean, I could see where it might not be best to continue to describe it as all risk, but if the insurance company is clearly delineating what is and is not a part of the coverage,
right,
the insurance company should be all right then, right?
And they should, but again, insurance companies have stepped on their tails in an effort to write business and in an effort to, have confidence in the industry. That term all risk was often very, very misused. And as a result, you have the legal system who said, hey, it says all risk in that policy, it should be covered. And you and I both have known forever that not everything is covered. And, we try to do our best to communicate with all our clients to go over all the exclusions in the policies, because every policy, including the one that they had, has that exclusion in it that would say cement's not covered, cracking's not covered, settling's not covered.
Well,
and go ahead.
Oh, go ahead.
Let me ask you this, Irv. You said there's been lawsuits over this issue and of this terminology before. Do you know what the outcome has been of those lawsuits?
Well, I will say this. I will share this with you. I don't know the exact outcome of all the cases, of course, but I can say that the word all risk is not used in any insurance policy. So
does that say something there for you?
Yeah, that does. That says a lot.
Yep. Yeah, they lost a couple along the way, and if they didn't lose them, they certainly had to spend a lot of money defending them.
Sure.
Well, let's take maybe a quick a moment for our listeners here, Irv, and let's talk to people what the basic purpose of insurance is, because it's not. I think some consumers out there have this idea that anything that is catastrophic that happens in my life that is going to cost me a lot more than I've got sitting in the bank is something that ought to be covered by insurance. Is that a fair statement that a lot of consumers think about?
I wouldn't say a lot, but there's a everybody falls into different categories on that. Some people feel that the insurance company is a maintenance contract. Therefore, anything that goes wrong in a house or a unit or a building, the insurance policy should cover it. I mean, after all, we're all consumers, and insurance policies aren't cheap per se. Sure. And things don't happen that often, so we hope as consumers that when something occurs that hopefully it's going to be covered. One of the most interesting things about, for example, all the flood damage and all the hurricane damage that we've seen over the last couple years, even right here in Minnesota, the tornado that hit the north side of town, there are a lot of buildings that did not have the proper insurance or did not have insurance. And down south at the great hurricane that hit New Orleans, there's literally square miles of absolute devastation that's not going to be fixed because those folks did not have the proper insurance.
No, you said that a couple times. I want to ask you that. You've said proper insurance. What was not proper? What was lacking for some of the homes with that recent disaster in North Minneapolis that went through?
In North Minneapolis, what we've seen clearly is that one of the things I deal with consumers, they say, well, listen, our house isn't going to burn to the ground. I mean, really, it's not going to be a total loss. So I don't want to buy insurance for $200,000 on that house. I only want to buy $100,000 or $50,000 even. And so what we saw on the north end is we saw a lot of properties that, while they had insurance for tornado, because clearly tornado is covered under all policies, a lot of people just did not have nearly enough insurance, and they won't be able to rebuild their house.
Wow, they were underinsured.
Significantly so.
And that's okay. You do see in your career there are some people that do purposely underinsure, and they're okay, but that's very specific cases with investors.
Exactly. There is a way to, quote-unquote, underinsure a property, and you do it there is a way to do it. It's a separate policy, but there is that understanding that if there's a loss, this is how much money is going to get paid.
Sure, and no more.
It's not exactly. It's more of a agreed amount, not having anything to do with how much it would actually cost to rebuild the home or property.
Isn't that some of that is what happens with what people call a risk purchasing group, where someone will purchase insurance for a number of buildings, but they might be in different states, different areas, and so there is overall not enough to cover all the buildings should they all go to the ground at the same time. But the idea is that if one is in one city,
we really discourage that. I need to be honest with you because it's the worst thing possible is to ever have a client and look that client in the eye and say, "Hey, listen, we didn't buy enough insurance."
Yeah. I'm sure that's painful.
I've determined, and I think I'll have a lot of people in the business that have determined the same thing. We never want to face that kind of a scenario.
Right.
So we work hard to make sure that, that the insurance coverage matches the right kind of limits. So if there was a catastrophe, like a tornado, that we would cover it. At the same token, the policies, as we've already talked about, just don't cover everything.
Right.
Okay. Say, Irv, could you stay on with us for just one more segment? We need to take...
Sure, I'd be happy to.
Great. We need to take just another quick break here. We got to pay the bills. We'll be back after these messages. Folks, you're listening to Where You Live with Gene and Tony on AM 1280.